Wall Street breathed a sigh of relief after the tentative agreement on a raise in the US debt ceiling was reached. Now the market is worried again about voting on the deal, and Wall Street is opening today on a pessimistic note. The likelihood of a default is the main culprit of pessimism. The US stock market opened in new trading with a mixed dynamic, and the benchmark stock indexes closed mixed, and most of them lost early gains. The Dow Jones dropped by 50 points, or 0.15%. The Nasdaq was the only index to lose in the green, with a 0.32% gain. The S&P 500 closed flat at about 4,205 points. The major stock indexes traded lower in the New York pre-market. The further trajectory will depend on US lawmakers and the voting results. The S&P 500 is expected to trade in the corridor between 4,150 and 4,220 points. US stocks closed mixed on a Tuesday because market sentiment voiced concern that American legislators could vote against raising the ceiling of the US federal debt of $31.4 trillion. At the weekend, US President Joe Biden and House Speaker Republican Kevin McCarthy made a tentative agreement to suspend the current debt ceiling and to cap some budget spending. On Tuesday, McCarthy said that the deal should be light for Republicans and it was likely to be passed, though some right Republicans were against the bipartisan deal. The House Rules Committee began reviewing the 99-page bill, and the White House said that Joe Biden had spoken to both progressive and moderate Democrats in Congress. The protracted decision weighed heavily on stocks. The only ray of optimism was AI-related stocks, which surged on Nvidia's optimism. The rally around the chip maker has been going on for days. Last week, Nvidia announced that it was aiming for record profits. Earlier this week, the company unveiled its plans to build a super-powerful computer to further develop AI technology. The news boosted Nvidia shares and enabled the company's market value to top $1 trillion. However, the company's profit inched down after the record was set. The chipmaker's shares grew by 3% and its market capitalization dipped to about $991 billion, a bit less than the market value of 6 top US companies worth $1 trillion or more. Shares of digital realty rose by 1.7% after a 14.6% climb in the previous two sessions, on expectations that data centers will benefit from AI computing. The Philadelphia SC Semiconductor Index closed up 0.1%. It gained 2.8% intraday, reaching its highest level since February 2022, but later pulled back. Tesla shares also rose by 3.5%, following Elon Musk's trip to Beijing for the first time in 3 years. Only 3 of the 11 sectors of the S&P 500 were higher, while fallen stocks outweighed gains in both the S&P 500 and the Nasdaq. At the same time, both Wall Street benchmarks were still set for monthly growth in May by the end of trading. Raising rates by the Federal Reserve to combat stubborn inflation is holding back economic growth and corporate profits. Data on Tuesday showed that consumer confidence rose more than expected in May, which could fuel speculation that the Fed may go ahead with the rate hikes to fight inflation. Futures traders put a 65% chance of a 25 basis point rate hike at the policy meeting slated for June 13 and 14. As early as Wednesday, futures for the US stock indexes fell sharply as the deal to raise the government debt ceiling came to a decisive moment, the vote. A bill to remove the $31.4 trillion US debt ceiling and new federal spending cuts was sent to the House of Representatives for debate on Tuesday. Legislators are expected to pass a vote later today, and after the document is adopted by the House of Representatives, it will be sent to the Senate, where the debate could last until the weekend. All this time, the potential US default will be the sword of Damocles hanging over the stock market. The situation is complicated by the set deadline. At this stage, according to the statement of the US Secretary of the Treasury, Janet Yellen, the deadline is fixed for June 5th. Besides, rating agencies are closely monitoring the developments and they may well downgrade the US credit rating, even if the bill is voted on time. Debate over the debt ceiling has been a drag on the financial markets, but signs of progress pushed the S&P 500 and Nasdaq indexes higher on a monthly basis in May. The Nasdaq showed the best results in May in 3 years, having risen by 6.5%, but June could not be so successful, bearing in mind all the risks, including the hawkish monetary policy. After the debt ceiling agreement has been reached and is likely to be passed by Congress, eyes will turn to the Federal Reserve. Investors are now waiting for the closely watched official employment data for May, which is due on a Friday, and the report could show the economy's resilience to high interest rates and inflation. So far, traders' bets and the voices of the Fed speakers are on the side of a further tightening by at least 25 basis points in June. Cleveland Fed President Loretta Mester said she sees no compelling reason for post-rate hikes, and the Chicago PMI will be released later today alongside the April jobs survey, which will be the first puzzle in the job market picture. In the corporate sector, HP shares stumbled by 5% after the company missed quarterly revenue estimates as inflation hit. Customers began to spend less on personal computers. Nvidia shares fell by 1.5% on the day after hitting an all-time high and briefly joining the elite club of $1 trillion companies. Other chip makers, including Advanced Micro Devices, Micron, and Intel, lost between 0.6 and 1.6%. Shares of a chip maker Umbrella plunged by 19% after its second quarter revenue guidance came in below estimates. But let us remind you that Jolty's data, the publication of the Fed's budget book, and most importantly, the vote of the House of Representatives on the debt ceiling can merely affect market sentiment today. As usual, the US dollar is benefiting from fears and concerns. The currency market is stormy in the light of a variety of economic data, and the US dollar index inched up by 0.2% intraday and settled at 104.40. The intraday corridor for the index is seen between 104 and 104.80. The greenback advanced considerably today to the highest level in more than 2 months because fresh economic data looked lower than expected CPI in Germany and France and the wobbly economic recovery in China. As a result, the euro slumped to the lowest level since March 20. Meanwhile, the US dollar index jumped to 104.60, the strongest level since March 16. Despite a nosedive of the euro, investors have not revised their expectations of a rate hike by the ECB. Market participants believe that the ECB's interest rates will peak at 3.7% by September from the current level of 3.25%. Perhaps the forecast will be revised tomorrow after the Eurozone's CPI is released. To sum up, the US dollar is set to close May with the strongest monthly growth since September thanks to its safe haven status, and the Canadian dollar was knocked down by falling oil prices. The US dollar's advance today also dealt a blow to its Canadian rival, having grown by 0.23% today. The USD CAD pays now trading at about 1.3630 inside the intraday corridor between 1.3590 and 1.3670. Being the commodity currency, the luna is hurt by falling oil prices. Both benchmark rates dropped by more than 1.5% amid the US dollar's rally and the weak data from China, the major oil importer. The sluggish economic recovery increased concern over global energy demand. Brent crude futures fell by 1.3% to trade at $72.72 a barrel, and WTI slipped by 1%. Both benchmark rates tumbled by more than 4% yesterday. China's industrial activity shrank in May more than expected due to big domestic demand, so the government manufacturing PMI skidded to 48.8 points in May from a 49.2 in April, lower than the expected 49.4 points. The loonie is propped up intraday by a report on Canada's GDP. Canada's economy expanded by 0.8% segmentally in the first quarter, having rebounded after stagnation in the previous quarter, and the actual reading is twice stronger than the estimated of 0.4% growth. GDP climbed by 3.1% on a year. The result beat the forecast by the Bank of Canada, and the regulator had predicted minor economic growth for the whole of 2023. In theory, it gives the central bank leverage to resume monetary tightening in the case of stubborn inflation. The crypto market looks gloomy today. Cryptocurrencies are trading under pressure because of a risk aversion. Bitcoin is displaying the opposite correlation with the US dollar index. The number one crypto plunged by 2.2% intraday to trade at $27,160. Popular altcoins are also infected by pessimism, except Litecoin. The Litecoin grew by 0.8%, and previously, after reaching a consensus between the Speaker of the House of Representatives Kevin McCarthy and the US President Joe Biden to postpone the issue of the debt ceiling until January 2025, Bitcoin rose above $28,000. Still, further jitter around the national debt ceiling pushed left coin number one into high volatility. Bitcoin is currently under selling pressure as the market participants are looking forward to further signs of a progress on the debt ceiling situation. In the industry news, Tether has announced its foray into the energy sector. The company plans to focus on sustainable energy production, specifically Bitcoin mining operations, in order to address the significant energy consumption problems of the cryptocurrency using renewable energy resources. Tether aims to mitigate the adverse environmental impact of a Bitcoin mining while strengthening the security of the network. The move is a key component of Tether's governance strategy, which includes allocating up to 15% of net returns to Bitcoin investments. Tether has earlier reported that it holds one and fails to settle above $27,000, then it will fall to the level of $26,700. An alternative scenario looks like a recovery to $27,500 and $27,800. And that's all for today. We keep monitoring the financial market situation and wish you profitable trade. Subscribe to our channel and see you tomorrow.